Hey everybody, welcome back to Markets and Sectors. My name is Mike Fairborn. It's great to be back with you. Hey, we did have a rate cut today. We're going to look at the markets. We're going to see specifically what sectors have responded post that rate cut. We'll take a look at this morning. We'll look at during the week as well. We want to see what's been happening there during the week in anticipation of this rate cut and really what is moving. So quite a bit going on. I've got definitely some quotes from Chair Powell to discuss. We'll talk about the economy as well as how that fits in specifically and really mainly into charts, which is what we really discuss in this class, markets and sectors, as also we do like to drill down in using top-down analysis, market action, sector, even industry sometime, ultimately down to the individual stocks. We'll see what's moving there as well. So with that, welcome to all of you joining the chat by a good friend and colleague of mine, Cameron May. You can follow us on X, Cameron May CS, Mike Fairborn, CS as well. It's got to be spelled right. And by the way, that CS is for Charles Schwab. Just we'll have that at the end. And all right, I'll keep an eye out in the chat as well, but I do appreciate Cam being there. Okay, well, let's dive on into it and see what is moving post rate cuts here. All right, let's start off with some disclosure items first, though, to get going. Information here is provided for general information only. The paper money software application is for educational purposes only. Investing does involve risk, including for some products more than your original investment. Now, futures and futures options trading involves substantial risk. It's not suitable for all investors. We do tap into some of those charts here, as many of you are well aware. Also, past performance is no guarantee of future results. And I think we're all set. Yeah, some additional slides, though. There are some content on that slide to be mindful of. Okay, what did we get? Well, I'll tell you what we got on the market. Just first and foremost, we got a reversal. If you were looking at this post-market, in fact, we'll go into a 6 month so we can really see that a little bit better. But you can see the dip down up top here, and then, we just recovered back. And so what we really basically get, anytime you see one of those hammer patterns occur, or it could be kind of like an inverted hammer, like a shooting star pattern, where you get the same pattern. I'm referring to today's action, folks, right here. Sometimes you'll get that to the upside, that long wick, and to the downside here. Basically, what you're getting here is market rejection, right, off that lower level, and then you bounce back up. Now, it remains to be seen what's going to happen, because ultimately, a candle like this does represent a tug of war between the bulls and the bears, and it looks like the bulls had their way towards the end of the day. You can see just the size of the pullback right there, and let's just see how we recovered post that 25-point basis rate cut from the Fed. Right there, you can see it coming. Well, that was the spike up right at 12, and then we dipped, but then we came back to that level, and you can actually see that really. Can you see the hammer pattern right there? Folks, you've got your high on the day. I'll just draw the hammer. Well, I'm sorry, I'll draw it out this way. Here is the close, and I think the open was just a little bit lower. Here's the high on the day right there, and here's the low on the day. You see you see the hammer pattern right there? So actually, this was in response post the rate announcement, and we came back up and just kind of settled into that range. Now, it's safe to say that, yes, there was probably a fair amount of volume that came in. We have to tune over into our futures contract to pick up at that volume, which is great to be able to see. And yeah, pretty much the biggest volume of the day. I'll zoom into it so you can see it right there. Right there. In fact, we were just kind of just like chilling out a little bit until the market announcement, and then it really got quite big. You can see right here a little bit of a market recovery, possibly tied into a big spike over here as well. So what does this tell us? You know what it tells us? Generally speaking, it tells us, we'll go back to the SPX here, that we still have to wait and see what happens tomorrow, and do we begin to break above the high of the low of the high of the low bar? Because it is technically a pullback, and I know there was a lot of volatility, a lot of, the news that came out, and a lot to discuss here on that. But folks, you still need to get above that high right there, and technically to close above it would still be, although it's only really a 2-day pullback, you're still looking at a Cahold pattern right there, or a Cahold, not really a pattern, is it? It's not actually like a price pattern. Well, it sort of is. It's like a 1-day price pattern, or 2-day technically, but that would be your Cahold, the close above the high, the low day, for indications as to a continuation of strength going forward. That's going to be true anytime you have these candlestick patterns. Here's one right here. Just case in point. See that right there? Closed above it. You want to see the action afterward. Here's a big one over here, far left-hand side. You closed above the high of that low bar. It rallied. Now, there's no guarantee it's going to rally, but sometimes those are reversal points. I know many of you are very good technicians. You're very familiar with it. And yeah, hey, that's one of the technical, candlestick charting is one of the technical tools we will look at here. Now, I'm going to do this because this could still be a little bit of a support level. And you can see we kind of bounced off that range as well. This might also, this ascending triangle, I'm going to go ahead and just, it doesn't quite line up perfectly. It doesn't now. The more I zoom in, it's a little bit off center there. This is the low. And sometimes what I'll do is I'll just draw these off of the closing or the body of the candle. And those sometimes can even be more relevant, I would say, in a lot of cases. But anyhow, here you go. What I'm getting at, folks, is I did want to draw our attention into short term, post this rate cut right there. That could still represent a range where we could bounce off support. And if I extended this over further, yeah, there could still be support. I've seen prices, once they get above these levels, folks, they will just kind of bounce and use it as a support level as they are actually going higher, because that trend line is also on an ascension, right? It's pointing to the upside. All right. Well, I did want to review that first and foremost. Let's see how our other markets are doing, and let's just kind of go through and take a quick peek at each of these. Oh, not there. Let's go ahead and just, well, let's see. I've got, I know I have my futures set up over here too, but I'll pull this guy up and we'll just see. Shoot, we could just use these. Sure. Got to get it linked. There it goes. Okay. So there's the ES, there's the NASDAQ, NQ for the NASDAQ. Very, very similar. You would kind of anticipate that. The Dow may be showing the biggest strength of the day, and I believe that's true. Let's go ahead and pull this back out again, and you can see right there, it was up about 0.6% to finish off the day. The markets are closed now, showing some strength there. We've talked about the Dow. We've talked about industrials, maybe getting some strength from the tariff situation, all else being equal. More on that in just a second. And that's the shooting star on the RUT right there, the Russell 2000, using futures as a guide here. Now, as we go through here and take a look at this, what I wanted to do, and let me just pull up my X handle real quick. I did make some notes as they were coming out specifically for you guys and for this class. So it'll take me just a second. I've just got to pull it up over here. There we go. Should be good. Let me just drag it up and we're good to go. Okay. We'll set this up. And I just wanted to highlight a couple issues. So yeah, the FOMC cut rates, 25 basis points, median projection. Now, this is interesting. Why might the market have responded back up towards the opening on the day? Median projection, 50 basis points more rate cuts in 2025. So that could be 2 more rate cuts. That's the median projection, right? The middle projection. That's the anticipation. Potentially 2 more rate cuts this year. Uncertainty about the economic outlook remains elevated. Okay, this was just tied into that. By the way, yeah, about 96% was the Fed watch tool this morning. I put a little note in here about the 50 basis points. Anybody thinking that? And guess what? Nobody liked it. They said, no, you're out of your mind. It's not going to be that. I was just curious what you guys would think. And yeah, you guys thought it would all be 25. And by the way, the Fed has really held within these bounds. So a lot of times what those percentages are, that's going to be based upon the number of Fed governors out there that are voting. And they'll tend to just go with those numbers because it is based upon, that anticipation of, just the sheer number of people voting 25 or 50. Just something to keep in mind. Now, with that in mind, though, I did want to go back. Let's just go back to the SPX here. Here's a little bit of a longer term approach. Before I do that, let's start off with our discussion as we go through here and we look at market posture, which we like to do each and every week. I don't want to miss a week on this going forward at all. So our market posture, how is the 10-period exponential moving average doing relative to the 40? They're both going higher. Now, as that is kind of a backdrop, yes, because I think Powell, to Kevin's point, I think he has stopped speaking. I want to throw out just some additional information. We'll just kind of keep an eye on this here for a second, but wanted to read this here. So, according to what we're getting here, jobs growth remains the key uncertainty and will help to push more rate cuts going forward. Some of the analysts out there in the market are suggesting that they want to see at least the jobs growing by 100,000 a month, is what a number of economists are saying. So there's weak readings on job growth and consumer sentiment. Now, other areas are strong. I'm just going to hit what they said initially here. Consumer spending continues to grow. Despite low consumer sentiment, consumers still continue to spend. So those are kind of at odds, but the bottom line is hey, one is a sentiment number and one is an actual number in terms of growth in spending. And we're seeing that in the economy, right? Isn't 2/3 of the economy spending, consumer or spending? I think it is. Yeah, inflation to peak maybe in the final quarter of this year. More quickly on inflation as it relates to tariffs. So these are quotes now coming from the Fed chair. He says higher tariffs have begun to push up prices in some categories of goods. So they are saying higher inflation due to some of the tariffs, and that's always going to be the case. It's not going to be necessarily across the board. You want to maybe look at that on an industry basis because that's really going to make really the most sense. There's some that will just not be nearly as impacted, if at all, relative to others. The overall effects of tariffs will include higher inflation and slower growth. And let's get into the labor market, which they said was one of the major risks. He stated that a sharp fall off in immigration, as we know, has been a factor in the labor market dynamics. Obviously, there's more to it than just economic numbers, but there you go. It is a sharp fall off in immigration. If we were to see the labor market meaningfully weaken in a way that was concerning, that would be a matter for that decision. So anyway, wanted to point those out. That's what they stated here. And let's see. Additionally, expectation consumer spending will slow by enough so that disinflation can resume in 2026. So they're thinking that, consumer spending will likely slow down, and that will help to moderate inflation in early 2026. Okay, wanted to hit those because those are really interesting. But remember, if you combine everything together, it really does tie in really kind of this point right here, and that is basically the median projection after all this information, after you dissect everything, potentially 2 more rate cuts this year. So what is that looking at? Maybe 50 basis points more. Okay, that was kind of our backdrop. We saw the market still showing strength. And again, looking at market posture on a weekly, what do we see big picture? Well, these are widening out. And folks, that is bullish type strength as we go through. The fact that one's above the other is clearly bullish as well. You got the 10 outpacing the 40 at a rapid pace. And by the way, the 10 exponential moving average on a weekly basis is not pointing lower. And we talked about last week, when you start to point lower, it can show signs of consolidation. Sometimes prior double tops will occur. Notice over here, you went sideways over here. And by the way, you can see this a lot on that 10 exponential weekly. Double top, you start to dip early. Sometimes you got to break back through again and then maybe find that trajectory. We don't see that. We saw it again here. We dipped, double top, and we just broke below. We're not getting any of that right now. So that's positive. Now moving on into one more. There we go. Just a daily time frame in terms of market forecast. Wow, 95 and holding flat. Positive strength for sure, using that intermediate term line. So showing some good strength there as well. Now, that was our daily. There's our daily. The daily chart. So the 10 and the 40 on a more minute level, we're holding up. Maybe we even got close to bouncing off that 10 today. Now that is somewhat interesting. You're getting a double sort of an indication of support right there. So could that continue? Remains to be seen. Okay, now getting into, not that wasn't fun, but we can get into a little bit more fun stuff, in a sense. just by coming over here and looking at our um, markets and sectors. We'll do this first. So the sector indices, what did we get on the day to day? So today, what performed? Now, this is going to give us a really good idea. I do want to look at the charts here of each of these, but on the day with the interest rate cut, what did we see unfolding here? Let's hit it. So we have financials, staples, materials, utilities, energy, healthcare, and just barely real estate. Underperforming, you can see down here. Okay. But a lot of times this is interesting. Will there or could there be potentially a shift in some of these sectors? We'll have to wait and see. One day is not going to do it here for us, but let's see what happens because this is really kind of on the defensive side, right? Defense. More of the defensive type sectors led on the day to day. Now, some of these too, you guys notice we do talk about this in my swing trading class. This is the TTM squeeze. This is a compression of lower volatility where the Bollinger Band goes below the Keltner channel. It's one of the codes that we did, and it is right there. Now, this, you can see it's been in that range for one bar. And a lot of times when you get into a sort of a tightening range, a lot of times you can break up or break down. Now, what's interesting is you compare this with, is it up or is it down? And you can get a general idea of what direction it might move. You've actually got the healthcare sector 5 days in extreme low volatility. Let me show you what that looks like over here too. Yeah. So let me do this. So let's go over here into the charts because we have access to that right over here too, to look at those individual charts. And we're going to a watch list. This is always a really, really interesting sort of an exercise to do. Take a look at those sectors in the S&P. Got to link them up first. Oh, right there. I do not want those to be sorted. Hit the wrong one. You got to go to the right one. S&P sectors. There's all 11 sectors right there. And as we go through them, we'll be able to take a look at a few of these real quick. That is linked. Why is that not? Oh, I know why. Hang on. Let's get back to our regular charts over here that are going to be automatically linked, and we'll start going through these right now. So that's the energy sector. I'm going to do it based upon the performance. Let's do that instead. The performance that we just saw here. So we're going to look at these charts in the same order that we just went through. Defensive more up on performing today. Defensive type sectors. There is the financial sector right there. Do you see the tightening of the range, folks, right there? Kind of like what you might refer to as a flag type pattern. Maybe. Will we break out of that flag? There's the upward move. It's right towards that high range, and it seems to be breaking into a longer term area. Financials. What could be moving out in financials area? Well, we could say something like a Citi. Okay, what else do we have? Goldman. You see the breakouts? And others in there, BAC, WFC would be there. Maybe a little bit of a lagger on WFC, but rate cut sensitive areas. Financials, okay? Here are the consumer staples. Kind of in a sideways range there. I don't think it was one. No, materials, and then we get down to healthcare that were in the TTM squeeze. Let's go right here. Look at healthcare. Oh, healthcare jumped up. What the heck? That's so strange. On the day. Oh, these are net changes. Gosh. Percent changes make more sense. That's okay. It's still giving us our numbers. You can see over here. Do you see that tight range? Let me show you something about healthcare here. We looked at this previously. Now, this is a range on healthcare. We're kind of sitting, well, let me do this a little bit better. If we're using the body of the candle, and we'll go full screen. In fact, we'll zoom in as well. Let me include that bar down here. Long sideways range. Now, drawing off the tops of these candles right there, we've kind of shown a tendency to hold a little bit of support right here. A measured move off the bottom, that is this range measured to the upside. I'm just going to kind of dot it. I don't know if that's perfect, but it's close to that level. Maybe it's a little bit too optimistic, but it's close. But if we break above, sometimes technicians will say, well, that's a measured move. Now, there are ETFs that some traders might use for healthcare. We don't go through that in this class, but they are out there. Of course, this is made up of a basket of individual stocks. This one is in a tight range right now and could find support. I don't know. Will it bounce? That's the question. We have to ask ourselves, will this go higher or not? This is one where we looked at in the swing trade class I did. This is one that we did take a look at, specifically this group. And this group, for that reason, there are a number of stocks that have kind of that swing trade tendency to kind of move a little bit. And we did talk about how stocks might hold at certain Fibonacci levels as well. And I'm going to go ahead and just highlight here for you. This particular area, let's see, let me just do that a little bit better here. There we go. So I'm going to pull this up here. If you want to take a look at that, it will give you a better idea of how to trade maybe that group if it is positioned, if it is poised to go a little bit higher. That's the question mark, but we did show how Fibonacci's can hold at certain levels, and some traders will look at that. This is the playlist for the swing trading class. I thought I'd mention it because it's part of one of the one of the sectors that's moving up right now. So I'm just going to say swing playlist. Just make it nice and easy to get. Here is that class that mentions the fibs, and this one did look like it is going or holding at one of those fibs. So anyhow, if you want to see it, okay, sorry. Trade class. It's there. More details on that as to how that might be potentially traded. While I'm at it, folks, if you are getting value from these discussions, be sure and smash that like button. It does help give this channel and this class relevance in comparison to the with the YouTube algorithm. So appreciate that. If you got to find value out of it though first, right? Don't hit it if there's no value. If there's not any value to you. But anyway, keep an eye on this, and then will you start to break up here? Remains to be seen. But truly, a sector that is more defensive in nature, and we have recovered. There could also be some value associated with it too, because it has been down. Other sectors have been up. This has been down, but starting to move. So I know we've had eyes on this one as of late. Here we go. Materials. Kind of similar, isn't it? Recovery off the bottom. There could be some value in this group. Of course, there could be other things that are drawing investors in, maybe higher dividend yields. And again, I have to state that dividends can always be cut. They're not guaranteed to continue in the future. But some of these areas within healthcare, within materials, have been known to, pay dividends. Some of these stocks. Anyhow, there's your breakup here. You're kind of resting again. It looks a lot similar to that swing trade kind of a bounce that could fulfill a target maybe up higher, possibly to prior highs, as you can see over here. So this could be of interest as well. I'm just saying they're moving today, but not only are they moving today, they've been in a compression range. And if they break out of that compression range, they might begin to move higher. A shift to defensive would make a difference in these groups, likely, right? I mean, if it shifts to defensive, these are right in the defensive area, and it could have an impact going forward, right? Because we're talking about defensive type sectors. Okay. All right. Here is the energy sector, which is right into that range. Let's just take a look too while we've got it. CL, crude light. Okay, crude light's been maybe a little bit of support down here. Analysts right now are talking about crude light or oil, and they're positioning, many of them, I can't say every one of them, but I have been reading about this, is that their anticipation is that oil prices will go up, but they can have some volatility. So their expectation is kind of up moderately, but with some potential volatility behind it, which is what you kind of anticipate with energy anyways. Oil, specifically, but that group. That was energy. And the last one that was up on the day, utilities, right there. And that one was kind of, it wasn't the highest performer, and it just kind of opened up higher than the close lower yesterday. But again, lower interest rates can help bigger, more capitalized, larger sectors, industries like utilities, very, very heavily capitalized. And that equipment, especially since a lot of it they don't own outright, maybe they could refinance at lower rates. Certain things like that could be affected too. So those are some ideas. Let's continue through our normal discussion since we got through market posture. I'll take a look here. Just want to do a quick review of the chat, but here is a breakdown of our markets here in here as well. Oop, let's go back over here and we'll see what we get. All right. Yeah, you are welcome, Mighty Mouse. And looks like Cam's got us all caught up. Oh, what is the TTM squeeze? So yeah, maybe I should point that out real quick. The TTM squeeze is basically an indicator. I'll go over here to highlight it. Since I did bring that up, I'll throw it on right here. So the TTM squeeze is basically when the Bollinger Band goes underneath the Keltner channel and you get into these really, really super tight compressions. Now, to make it easier to see, what I'll do is I'll just go over here and take off the histogram. I really don't use the histogram on too many things, but over here, for example, when you get into that red area, maybe it's suggesting extreme low volatility. The Bollinger Band dips, that's low volatility, but when it moves underneath the Keltner channel, it can be even more, or even a larger sort of compression of price range, right? Volatility meaning, just the price movement we're getting. If it goes into a tight range, that's when oftentimes you'll see the red pop up. But that's ultimately what's going on with that. Did some discussions on the ThinkScript class. In fact, that's where we created this TTM squeeze bars. I mentioned it. ThinkScripts aren't guaranteed for timeliness or accuracy, but as long as the data that's coming to the platform is good, and we have good data, then mathematically it'll just give you that number there. But that was one we created. That can be helpful too when you're looking at compression ranges. But if that's of interest to you, just go to those playlists and you can go into the ThinkScript class and you'll see right in there. Well, I'll just show you where to go. Anytime you want to do that, just go over here, click in this search box as you are on Trader Talks, and just go TTM right there, or TTM squeeze, and you'll find it. Looks like there's been a few in there. Maybe I used, okay, mine's way down the chain, but it might be this one here. Explore momentum setups with multiple TTM squeeze examples. Okay, and within this, there is the ThinkScript code in the description section. It's there for you. All right. Just want to mention that is in the chat. Okay, you guys are welcome. And let's go ahead and go back now to our regular discussion here on markets and sectors after we got through a lot of the Fed announcement and then went through some sectors. Now, let's take a look at the market big picture, see what our indicators are showing us. Now, our breadth indicator down below, I think we're fine on the McClellan's, not really saying too much, kind of flatlining and not at any extreme ranges here. But you'll notice that on the AD line for the NYSE, a much larger basket of securities there, we are holding up. And folks, this has been a real positive, and I would even venture to guess that this has maybe added some breadth. Clearly, obviously, it's breadth to the market. And a lot of times you need that breadth for that trend to continue. And when this remains strong, and we've really just held flat too, I think it has historically been able to kind of power trends up over extended periods of time, because you are just getting multiple companies that are outpacing decliners over a historical period of time. And that gives us a trend. So what we're seeing here, if we break this down, this is really a trend, a cumulative trend of market breadth. What is the total basket of advancers and decliners doing in the NYSE and the NYSE here? 2,700 companies out there. That trend's been strong. So, like I said, really powerful can be very powerful, has historically been very powerful for retaining that upward trend. I just reemphasize that because I think it's really played an interesting role, perhaps. All right, the equal weights you have to say, have been not holding up as well here on a smaller basket of securities here, NYSE, but it's okay. I mean, they haven't been breaking higher, but they've been flattening out. This is a crazy number. Anybody venture to guess, what percent of the S&P 500 on a market weighted basis, just the standard S&P 500 that's market weighted, what percent of the top 10 performing or the top 10 largest companies are having to account for the market's performance or gains currently? It's like the top 10 stocks are accounting for 40%. I think of the market move this year. Now that's going to change, but that's a massive number, right? It's crazy. It's a very, very small number. Of course, breadth would be helpful here. We've just added the EW on at the end of the SPX. So it's an equal weight. Again, if we can continue to see this making higher highs and higher lows, that could be a real positive for breadth in the S&P. But, going back to the NYSE, I think this has been a powerful sort of an insight. Oh, you were even thinking higher there. Yeah. 40% of the market in 10 stocks out of 500. But yeah, I could see your point there, Riceberg. Okay. Oh, we're almost to seasonality. We're almost there. We're definitely going to hit that, John. Will was going to say 80. Yeah, I know. It's like you'd hear 80 and you might not actually be too surprised, right? You'd say, well, yeah. So basically double, Will. 40. Yeah, that's a big number, but I wouldn't have been shocked. Actually, I did go, wow, that's a lot. But then we've seen those numbers previously. All right. Nothing on the Hindenburg Omen. So that itself, in and of itself, is a positive. You wouldn't think there would be too much to show up here because of that long upward trend of advancers and decliners. Remember, you have to get a significant number of 52-week new lows there. And we're just not getting that, and all else equal. That's why I put that positive sign. Also, a drift here, a positive drift in terms of new highs in the NYSE. You can see that, after this tariff situation, we had a number of companies that did. We had actually on that day, we had a grand total of one company. That's it. We had one company hit an all-time new high out of 2,700 stocks, 2,700 plus companies. That took a big hit. Yeah. And that is the NYSE. And you can see we have not had too many getting back, but they have still been making higher highs from that low. Not necessarily all-time, or let's just put it this way, not 52-week new highs. Maybe on a shorter-term trend, they've been extending up, but that's a positive drift to the upside. Not anything where it was previously, but as long as that continues to go higher, that could be construed as a positive. It's not as positive, but there you go. Okay, now what I love about seasonality here is it still shows us our price patterns of the ascending triangle. Of course, this is the current year, and it's not yet completed. So this is current. You haven't seen this before. This is the seasonality chart. This is I've been using a 10-year, kind of split the difference between 10 and 20. They all look very, very similar. You can see we have been going counter the seasonal trend thus far in April from about right there, right? Up to this point. I can't say that far. I'm sorry. So about right to here. Here, and I'll try to line that up to about here. That's the counter trend. Now, historically, this is really one of the seasonally weakest parts of the year. 5, 10, 20 years. I've seen 50 years. 50 years starts to blend into October a little bit, but 5, 10, 20 on average, you're looking at September being a weaker chart. Now, what's interesting here, I'd love the ascending triangles because we talked about the key support level that could be coming up right there. We looked at that, some of those moving averages, the 10 moving average, which has done a pretty good job encapsulating this upward move. But if we come down, and right now the 10 is right at or very close to the upper ascending triangle line. So there could be a key level of not resistance, not unless you go below it, but support right now. The trend is up. So it's been counter trend, counter seasonal trend for sure through mid-September. Okay. Will that change? It remains to be seen. The reportions this year, that's going to be definitely due to tariffs, where we went against the underlying trend. We came back to a seasonal time frame, and here we are outside of it again. And I would say all through this time, we were pretty much in line. Now we're falling out. So watch this sometimes. Now, this doesn't happen every time, but every once in a while, you'll see this happen. You'll go up during a weak month, and then you'll go down during a strong month, like a stronger month or more neutral to bullish month like October. So keep that in mind. That could happen. What would be nice for the bulls is if you get this traditional seasonal move. November, historically, the strongest month. It used to be March until COVID and tariffs messed it up. But, you know, sort of the year-end rally that you're getting right here. So keep an eye on that as well. It's a very, very interesting time of the year for seasonality. This is pretty much up to sideways, which we saw, but keep a watch on that. All right. So breaking that down, we love to do this towards the end of our discussion. Take a look, pull this up. Take a look at some of these shorter term time frames. That 30-minute time frame gives us more visibility as to what that ascending triangle actually looks like. Drawn off daily closing prices, upside and down. You can see us come down here and we bounced off it. But if you're looking for earlier indications of a change in trend, and let me do this. I'm going to go up top. I'm just going to click on the wheel, and I'm going to go to my price axis. I'm going to extend this out by an additional 25 bars. Let's go to 50. We'll go to apply. Give yourself a visual here to kind of take a look at and kind of imagine what this could look like and what you're looking for as to what would be negative. Say, for example, let me just draw like something that traders might consider to be negative if this were to unfold. You know, you break down here, you touch this level, and then you break this point, and then you come over here and you break it again. So you're making lower highs, lower lows, and then you start to roll over again, kind of sharply. Now the trend's against us. We've broken support, and it could drop. You just get much better visibility on a shorter term chart. Now, flip side, and really sticking with the underlying trend, which is up, what about a break above the high? So in other words, this test of support, which was resistance, 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 and through here, resistance. If we break above here, that could be the hold on the daily. It's got to close above the high to low day, but that could be sort of a real break from seasonality if we extend to the end of this month, showing some strength. But like there could be signs with that, right? With seasonality and whatnot. With interest rates, expectations for a 50 basis interest rate cut towards the end of the year. Now, look at the NASDAQ. How are we doing on the NASDAQ relative to the equal weight of the NASDAQ? This is the NDX. Oh gosh, it's a long one. That's the symbol right there, if you ever wanted to do that. But there's your NDX equal weights. Not doing as well. You like to see one going up relative to the other and continuing higher. Because I'd say a lot of what's been moving the S&P 500 up. Remember those 10 companies that accounted for 40%, folks? I would say because they're technology, right? They're going to be part of that NASDAQ 100. So seeing how this is moving could be interesting. There's just a quick glance at those market weights within the S&P right there. Yeah. Those bigger boxes will move the market more. They're just weighted to move the market more. Okay, and last but not least, how is our value kind of range doing using the volume profile? Now, this is much more interesting when we narrow the time frame down because we're clearly above this level and we've broken into a higher range. If I look at volume profile, let's just do this. Let's go into a time frame of something that makes more sense to us here, like a 3-month. Okay, this has really been where the majority of trading has occurred. Now, I would even say, or slightly below it. That's the top 10% volume, where the volumes come in at. Now, obviously, there's no volume when you break up above here, but this could be a key support level too if prices were to dip down. Again, we're using the ES as a guide. Just keep an eye on this. But that has been known. I mean, where's been the majority of trading taking place at this range, 6,500 to about 6460 or so. So the majority of trades have taken place there, could represent support as we go through that. Folks, I hope you found today's discussion informative and useful. We went through a lot of information. In fact, we went through, a full breakdown really of, a large portion of the quotes from Fed Chairman Powell. We talked about his concerns, where the expectations are for the upside. And we also talked about, expectation of the median expectation for 50 basis point cuts this year to finish off this year. In fact, there it is right there. I'll throw this in too. Be sure and follow Cam and I on X. There's my handle right there. Hopefully this gives you a good feel. Again, folks, if you're getting value out of these discussions, smash that like button. Appreciate that. And be sure to subscribe to our channel as well. Love to have you on board if you're not already. You can do that bottom right-hand corner of the screen if you haven't done so already. So with that, thank you, Cam, for your help. Great to see you all. And folks, I'll look forward to future discussions with you. And I think we're all good. I didn't see a survey. So, all right, folks, have a fantastic rest of the day. Catch you next time.